1%, close to a 1% rise on both Sensex and Nifty, despite fairly muted results from the IT sector, whether you talk about TCL, TCS and HCL Tech, we will come to those subsequently, or even the inflation data, which has not been at par with what one would have expected. I mean, RBI has been trying to hammer down inflation despite the pauses that it has taken recently. The expectation was that inflation data for the month of June would come down closer to 4% or so, which is the bank's central target of the RBI. But inflation has not come to that threshold. In fact, it's hovering around 4.8% for the month of June. This is core headline inflation that I'm talking about. And data from US on the other side, US inflation data has been a little positive. It's come to a 2-year low squarely at 3%. And so the markets have sort of, the signals that it received from India's inflation numbers have been mitigated by better news coming from the US. And despite the IT sector being fairly subdued, fairly muted in its results, markets are holding well. Right now, Sensex is up 10:03 a.m. this morning. Sensex is up about 550 points, inching very close to the 66,000 number. We are at 65,946 right now. Nifty is also up about 160 points at about 19,545. Let's look at some of the indices and some of the stocks which are in action right now. Nifty IT up by about 1.5% or so, 1.6% or so. Again, surprising because results haven't been, path-breaking or market street beating as per expectations. So Nifty IT still in the green, Nifty Bank also in the green, Nifty BSE small cap also in the green. So overall, all indices are holding up well. The action that we are seeing specifically on stocks, HCL Tech is down about 5.5 or so, trading right now at 564. And then, of course, you've got HDFC Bank, and today is the day, 13th of July.
Listing.
The HDFC Bank merged entity listed as HDFC Bank only. So HDFC gets knocked off the bosses today. So HDFC Bank is in focus. It's up about 20 points or so, trading at 1,653. So overall, I think the market sentiment is positive. There are no fears really to talk home of or write home about. US inflation data has come out. US job reports came out last week. So overall, markets seem to be in a comfortable position and taking the muted results from the IT sector also fairly well.
Right, so markets responding there. As far as results is concerned, let's quickly understand some of these numbers that have come in. Yesterday, the earnings season began. TCS reported net profit up at 16.8%. This is muted, but in line with the estimate because of the demand that is likely to be subdued.
Right, Shweta. So, it's interesting to look at these numbers both in INR terms and USD terms. So, in INR terms, the net profit is up 16.8%. Profitability is a constant across both currencies. But if you look at the revenue, for TCS, the June quarter revenue, Q1 revenue, is up about 13% Y on Y when you talk in INR terms. So, in INR terms, there's a 13% Y on Y jump, taking profits for the quarter to the range of about 60,000 crores or so, which is in INR terms, it's a good number, 59,381 crores. But when you look at this in constant currency terms or dollar terms, remember, the rupee has been depreciating consecutively for a while now. In constant dollar terms, the revenue rise is only about 6.6%. Right. So at 6.6%, this comes to about $7.2 billion. So again, that is the case that you will see across all IT sector results as they come out. And I think Infosys would be the last one to come out with its results on the 20th of July. But you will see perhaps a good headline number when it comes to an INR-based revenue rise. But when you juxtapose that with a constant currency like the US dollar, the double-digit growth that was estimated on USD terms has been subdued, which means that the global macroeconomic environment with respect to supply chain disruptions, with respect to the US banking crisis that we saw, and discretionary spendings on IT, on technology, on upgrading services, upgrading customer experience, all of those are likely to take a beating in the results that come out this month. So this is a trend that you're seeing pretty much across the board. So in the case of TCS, let's say, banking and telecom, these are two big sectors domestically as well as globally, which shore up the order books of IT players. In the case of TCS, which has a lot of business from the West, from the US and European markets coming into India, it has seen a pullback on these discretionary spendings that I talked about, and their growth has been just about 3%. So 3% growth in banking and telecom, as opposed to an overall 6.6% revenue growth in absolute dollar terms. Now, long term, the sentiment within the TCS, results that came out yesterday, the sentiment expressed by the MD and CEO suggests that overall TCS long term is not really afraid of losing its sheen and losing its standing. And these discretionary spendings, especially from banking and telecom, are likely to come back to the market and to the company. And hopefully in the long term, while presently for the financial year, TCS is expecting a revision in its guidance that it won't be a double-digit growth, it is going to be a single-digit growth. But overall, the long-term prospects don't seem too dampening for TCS. And I think that is reflecting in its stock also, not really taking a beating despite these muted results. So if I were to pull up the TCS price right now, it's up about 2% or so, Shweta. So despite these being muted, so to speak, subdued numbers, and the double-digit financial year growth expectation guidance revised to single-digit, markets are still bullish on TCS as a stock and not really, seeing any sort of downturn there.
Right, and moving on to tech major HCL, I'm looking at the HCL stock, which is also slightly up, about 0.59% as of 10 o'clock this morning.
Intraday it has picked up, but when the markets opened, in fact, it was down. It took a beating of about 5.6% or so. And this also comes again squarely on the back of the results announced yesterday. So revenue up in INR terms about 12%, 12.1%, pretty much in line with TCS. But HCL Tech, being a much smaller player in the overall tech space as compared to TCS, in absolute terms, the revenue is up at about 26,000 crore rupees. Remember, this number in the case of TCS is nearly 60,000 crore rupees. So HCL's absolute revenue is pretty much half in the June quarter as compared to TCS, though the Y-on-Y growth for the quarter has come pretty much squarely in line with TCS, which means the business has grown pretty much in line at about 12%, 13% or so. So I expect a similar sort of uptick in revenue for both Wipro and Infosys as well. Now, in constant dollar terms, remember we talked about TCS. In TCS, in dollar terms, revenue was up 6.6%. In the case of HCL Tech, that dollar term revenue has come down, slipped about 1.3%. And that is playing out on the stock right now. So in dollar terms, with a depreciating rupee, HCL Tech has actually slipped 1.3%, despite INR term profits being up about 12.1% or so. Net profit has risen 8% Y-on-Y, 3,500 odd crore rupees. And of course, the guidance, like in the case of TCS, even for HCL Tech, the guidance has revised downwards. The FI growth expectations were about 14% or so, 12 to 14% was the guidance given. It seems that the revised guidance has now come down to about 6 to 8% growth. So the double-digit expectations from the market and the guidance that was shared earlier at the start of the financial year does not seem to be holding any water right now, and it has pretty much come down to single digits,
Right.
and squarely a 6 to 8%. So it's not even really high single digit
Right.
growth.
So tapered expectation both in
Absolutely.
case of HCL and TCS. The stocks, of course, took a beating yesterday. They're doing slightly better, especially in case of HCL. It seems to be recuperating some of its losses as of this morning. We'll, of course, keep tracking you all those
While we're on the IT
details.
sector, Shweta, there are also interesting insights coming in from Wipro and Infosys. So I thought, maybe we can spend a
Absolutely.
minute talking about those. In the case of Wipro, AI is something that it is squarely focusing its energies on, and Wipro AI 360 is a new generative AI tool being developed by Wipro, and about $1 billion worth of investments by Wipro in this generative AI tool called Wipro AI 360 is in the works. From news reports, we are reading that this investment is going to be realized over the next 3 years, and about 30,000 experts in the field of analytics and artificial intelligence are being brought together to build this new AI tool called Wipro AI 360. And this is something which, which I think we will have to keep our eyes on and see how the India AI story shapes up. And recently there was a column in Bloomberg which pretty much suggested that Infosys lost its edge on generative AI when Vishal Sikka quit. So when Vishal Sikka was the CEO, and there was an acrimonious exit that Vishal Sikka received from Infosys on account of Chairman Emeritus founder Narayan Murthy crusading on behalf of shareholders and saying that Vishal Sikka is not really working squarely in the interest of shareholders. I think what really came out was that Vishal Sikka had, an AI model already in place for Infosys to develop the next generation of artificial intelligence, well ahead of any of us really hearing about Bard or ChatGPT or Baidu or any of these new engines of AI being developed. But that vision perhaps was not in sync with the vision of the founding team, and Vishal Sikka had to leave Infosys. But Wipro is squarely taking that Indian AI piece forward. And taking it to some sort of a logical conclusion with this $1 billion inflow into artificial intelligence. And talking about Infosys and HCL Tech, going back to HCL Tech, well, in sad news, the appraisal cycle has not gone through. So HCL Tech has deferred the appraisal cycle by about a quarter. So the appraisal cycle usually that kicks in the month of April is now likely to kick in only this month in July. So a quarterly delay on appraisals for HCL. And in the case of Infosys, again, the appraisals that are usually doled out in the month of April have not yet been doled out. So mixed cues from the IT sector. And this is where the story is. I think we'll have to wait for Wipro and Infosys results also to come out and see if their growth is pretty much in line with the HCL Tech and TCS, at least on INR terms, if not in dollar terms.
Right, and earning seasons, remember, kick-started this week. We will, of course, keep tracking all those big details for you. But another stock to look out for would be the gaming stock. The gaming stock that took beating on the back of government announcement that there will be a 28% GST levy on online gaming, and online gaming platforms, of course, coming out in huge numbers. And not just the gaming industry. This is a unanimous approach from every other famous person out there, from Ashneer Grover to all host of industry stalwarts, coming out in favor of online gaming industry, saying that this is not going to be very helpful for the gaming sector. One of the crucial clarifications that's come in by the way of retrospective taxation. Will the taxation, the GST, be applied retrospectively? And we now know that it will not be, Karthik.
Thankfully. So I think what was a death blow for the gaming industry, what was touted to be a death blow for the gaming industry, is thankfully still a death blow and not a real coffin dug up already. So it is not retrospective, and that clarity came in last evening, that this taxation is going to be from the day that the law gets passed in the parliament. And this is, remember, right now these GST council recommendations is all a proposal. It is not, it hasn't been passed yet. So once it gets passed, then from that day the taxation kicks in, and this taxation is not going to be retrospective. So some sigh of relief there for the gaming sector. but only a very limited sigh. It's not really, it's not something which is going to change their fortunes. It's just that their death gets deferred by a couple of weeks or months. But yeah, the gaming stocks are not doing well, Shweta. So Delta Corp yesterday had hit lower circuit. It closed about 23-24% down, and even this morning when trading has begun, it is already down about 3.4% or so. And look at the graph. I mean, the stock price has gone from from 7th July when it was trading at about 252 rupees. Right now it's down to about 183 rupees. Now,
I'm looking at a 5-day fall in Delta Corporation stock, which is approximately 27.37%.
That's right. So about 24% yesterday, 3% down already
30%
today.
30% down already.
And so is the case with Nazara Tech. Nazara was down about 5%, 6% yesterday. It's down about 4%, about 0.5% right now. So gaming stocks not doing well, but I think the action is not as much about the stock story here. That is something which is cyclical. It will recover, and there are going to be means and ways through which stocks will stabilize at the real value where consumers, retail investors, as well as the company's projections meet expectations of each other. I think the real story which is emerging from here is this whole concept of sin tax on something as addictive as, let's say, alcohol or cigarettes being imposed on something like gaming, and gaming being considered, online gaming being considered, at par with other sins. And that is not something that the gaming industry really expected. And in fact, yesterday while we were speaking to Roland, who's the president of the All India Gaming Federation, I think there weren't any indications given to the sector and to the bodies which constitute players in the sector that such sort of taxation, draconian taxation is going to come and hit them. And their fear really is, if you were to understand the math that is being played there, I think the fear really stems from the fact that this taxation does not come on the fee that the platform charges, but on the face value of every transaction. Which means if you buy tokens worth 100 rupees, or if you were to play with 100 rupees of real cash, straight away the 28% tax kicks in, and that tax kicks in taking your 100 rupee value down to about 72 rupees for you to play with. And then in case you happen to win, there is a 30% TDS already in place on that victory money. So for you to be able to recover your 100 rupees spent on gaming, you need to first recover the 28 rupees lost in GST, and then the 30% lost in TDS, and then square that up as your victory, which means you need to now win 50%, 60% of your invested amount to actually make money out of real gaming. And so I think it's, again, if you were to look at both sides of the coin, the GST Council believes that this is something which needs to be put at par with casinos, like poker chips, games of chance, or let's say horse racing. If those are games of chance and if those are being taxed at 28%, then why should online gaming not be taxed at the same level? But the other argument that emerges is that if this is not a game of chance but a game of skill, then why aren't you taxing, let's say, entry into stock markets at pretty much the same value? Because stock markets also have a game of chance and a game of skill both working together. So your 100 rupees invested in stock trading is not taxed at 28% face value GST.
There's something very interesting that Finance Minister, was also the chairperson for GST Council, said, and she said it's a moral question. You can't be taxing online gaming at the same rate as you tax essential items, which is either 0 or 5%. And it's interesting because between 5% and 28%, there are various other tax slabs as well, which could have been thought of. So something went, and I'm sure a serious discussion went behind this proposal. And amid all the backlash, the government is also saying there's no need to rethink. We're not going to rethink. We're not going to take it back. That doesn't really augur well, Amit, for a lot of people who are hoping to play games, and also for gaming platforms that may not get their due players back playing with them anytime soon.
I would like to be an optimist, and I'm sure these companies will find a way to skirt it around. The example being Goa, where casinos were not allowed to be open on land, so they are all on sea. So I hope the biggest impact will be what happens to the 2.5 billion FDI that has already been invested in India. That gets jeopardized. Two, what this will do to gamers basically is they will go on to illegal platforms, and that will be more hurtful to them. So if it is just a moral question, then if the government is not taking care of the gamers, because an addict will find a way and then he will go to an illegal platform, what happens then? He is more in danger of losing more money, and then he'll have no place to basically even argue his case. So these are the two places where the bigger impacts will come in. One is the FDI in this sector, which, as Karthik had mentioned yesterday, will flow into other tax havens. 2.5 billion has already been invested. What happens to that? It goes away. More that would have come in, and it's a tech sector. It should, in my opinion, it should be promoted rather than taxed.
Okay, promoted rather than taxed, but the government deems it fit at this point in time to tax gaming industry, the online gaming in India, of course, now attracting a GST rate of 28%. A lot of hue and cry, but the government seems determined and not ready to roll it back. We will, of course, have to wait and watch out for what happens later on that story. But shifting focus now to another big story that is coming in by the way of inflation. Inflation in the month of June has come in at an upward of almost 4%. 4.81% in the month of June, to be particular, on the back of higher food prices. Karthik, I remember discussing tomato prices with you, and I think this was an interesting discussion because I thought I got a kg of tomato for 80 rupees, and which is when I was educated that it's not 80.
250 grams or half a kg?
Half a kg, apparently.
Okay, well, not bad. 160 rupees a kg
still down.
is not bad when it was trading at 180.
And that is when I was educated that I may not have received the quantity I thought I did. But really a dampener for people in general. We'll of course come to the macroeconomic picture later. But all in all, happening on the back of seasonal rainfall, or you call it unseasonal at this point in time. I think even the meteorological department is not sure what to call it, but definitely a rainfall that was not expected.
I know, but Shweta, that rainfall came only in the month of July. The inflation data that we're looking at comes a month later, so it's in the month of June. So I think tomato prices, inflation numbers will stack up only next month. Right now, the inflation, headline inflation that we're looking at comes on the back of pulses and cereal. Food inflation in the generic, definition of food, which is grain and pulses. So it comes pretty much on back of that. And yeah, inflation is up to a 3-month high at 4.8%. And if you were to look at this split, rural inflation is down to about 4.7%, whereas urban inflation is up about 5%. So squared off, it's about 4.8%. This is definitely much higher than RBI's sort of, self-imposed mandate of 4%. Now remember, this 4% also has a threshold of a plus minus 2%. So we are comfortable in the range of anything between 2% to 6%. But RBI is very keen to hammer this down squarely to 4%, and 4.8 in that sense is a much higher figure than 4%. Now, of course, if you look at the trend, that trend has declined over the last 4 months. Inflation kept coming down a few stops the last 4 months, and then again there has been one little rise in the month of June. So now I think all eyes are going to be on the next RBI Monetary Policy Committee meeting, and see if rates are going to get tinkered again. But experts believe that RBI is going to maintain its pause and will hope that the stabilization happens by the generic demand supply equilibrium manner rather than an infused sort of forced coerced measure of increasing rates any higher, because increasing rates is going to have a much larger negative impact on credit offtake and industry firing, and overall it is going to not be great news for election year in general if industry offtake of credit does not pick up, and hence that is likely to impact GDP growth
re-evaluation of the hawkish pause.
No, so I think that hawkish pause will continue for another month or two definitely, and only if this trend, upward trend, sustains for another month or 2 months will RBI take a call on another rate hike, if at all. But it's also important to note that inflation
given what's happening, and I'm attesting this to a lot of reports that I'm reading right now. You correctly mentioned the rainfall, as damaging as it is usually and has happened in the month of July. But what I'm also reading is that it was due to unseasonal rainfall, uneven monsoon rains, that crop was damaged in the month of June,
Right.
and the goods movement was also sort of hindered, as a result of which the pulses inflation and of course the inflation in
Right.
various other vegetables
Right.
went up.
Sure.
This is worse this month. So I'm what my understanding is, and correct me if I'm wrong, that the inflation number is only going to be worse in the month to come.
Quite possible. Quite possible, on the back of veggies, on the back of tomatoes, on the back of unseasonal rainfalls, resulting in disruptions in supply chain overall, in transportation, movement of goods from one state to another, one city to another. The beating that tourism would have taken in the month of July, with Himachal, Uttarakhand both seeing pretty torrential rainfall. So it seems that, yeah, July inflation numbers, which will get released next month, could inch a little higher than the month of June. But we'll have to look at, let's say, even other parameters of industrial growth, which again in the month of May, industrial growth comes of the month prior to the inflation data. So IIP figure for the month of May, for example, has been higher than expected at 5.2% versus an inflation of 4.8%. So if industrial growth is able to surpass the inflation on account of food and vegetables and cereals and pulses and tomatoes, then maybe that balance could be struck where we don't see a much higher inflation number in the month of July when it comes out in the month of August. But yeah, I mean, it's again a function of industrial growth, also takes into account logistics, transportation, supply chain. So if that has a negative impact on industrial output, and that coupled with higher food prices, veggie prices in the month of July, we could see a much higher number, and then perhaps RBI would be compelled to hammer down inflation through a monetary policy hike.
You know, and this begs the larger question, the need for sustainable development. You know, people may take it seriously, may not take it seriously, but any and this is not accidental. This is a proper result of growth which is basically all over the place, haphazard, and to the point where we haven't really taken care of our carbon footprint, as a result of which we're seeing unseasonal rainfalls, there are more earthquakes. All of this a consequence of perhaps not growing, keeping the SDGs in mind, the Sustainable Development Goals in mind, and therefore a need to perhaps have a growth which is more sustainable, as opposed to having a growth which only takes care about growing at any cost, at the cost of environment, because it pays back. Eventually you got to pay back.
You're right, Shweta. I mean, you know, fundamentally, and I always maintain, you know, you're wiser in hindsight. Fundamentally, there is no defying the logic that you're stating, and perhaps if all this was adhered to, taken serious cognizance of 20 years ago, we would have had a more sustainable country and a more sustainable agriculture and more sustainable supply chains today. But you know, these are long-term, high investment projects, and it completely varies from priorities, urgent, pressing needs of a country versus, you know, so what do you invest in? You at one end are talking about uplifting 415 million people from poverty to middle class. You're talking about a growing middle class which will reach about 1 billion by 2030. So what are the priorities? And in those priorities, remember, you have limited budgets, and using those budgets to fulfill the important and urgent priorities, I think, ranks higher on the priority of successive governments over the last 75 years of our independence. Every successive government has tried to tackle with that urgent and important quadrant in the activities to do. And these are great should haves, could haves, over time must haves. But if it is not immediate priority, it tends to get sort of, you know, downgraded in the list of priorities.
Because, you know, inflation doesn't just hurt economic numbers, it also hurts people at the end of the day. So the people that you're trying to uplift from poverty, they are the worst impacted. If they cannot afford, you know, food, they cannot afford housing, they cannot afford sanitation, it hurts them in the longer run. So, you know, it's about having an approach that is more holistic. If you're going to push them back into poverty, it doesn't really help.
You're right, Shweta. But again, I mean, if you look at priorities on hand, let's say 20 years ago, 30 years ago, what were the priorities of the government? 30 years ago, we were dealing with a balance of payment crisis. We had to mortgage all the loan in the chest of the RBI, physically ship it to Bank of England to get a loan from IMF and from the West, which could deal with our immediate problems of balance of payment. Right. So 30 years ago, we could not have really, taken this journey of sustainable development when we had a problem of not being able to pay our immediate bills. 20 years ago, we were dealing with a very different scenario. We were dealing with post-liberalization, inviting industries to come set up shop in India to really give a boost to the end of license Raj, get industry to pop up and really give this fillip to corporate India to invest in long-term projects in India and build highways, build roadways, the National Highway Authority of India building the Golden Quadrilateral. We had basic challenges of connecting roadways, basic challenges of tap water available, potable drinking water available. 10 years ago, what were our priorities? We wanted to attract FDI. We wanted to attract manufacturing in India through Make in India. We wanted startups to come to India. We wanted foreign venture capital money to be invested in India for these startups to create employment. So I think if you talk about those fairly substantial milestones in the recent history of India, sustainable development would not have ranked anywhere. And in fact, if anybody took a proposal of investing, let's say $500 million, $1 billion in a sustainable development project, it would not have seen any merit for the government to invest in it because we were dealing with more basic challenges. But I think now that we are pretty much, getting to the spot of the third largest economy by end of this decade, fifth largest economy already. I think the time is right now that any new future projects that get signed, whether we are building new airports, whether we are building new ports, whether we are constructing new roads in hilly terrains or highways for that matter,
or vehicle fleet,
exactly, or any sort of fleet. And now I think the time is right.
Our power consumption.
That ESG becomes a very, very important component in giving a green light to projects. Now, it doesn't matter if you will end up investing 10% more as opposed to putting 100% of your money back then. Now, if you invest 10% more and if that ensures that you have a more sustainable long-term project on the roads, go ahead and sign that 10% now. But could we have done that 20 years back, 30 years back, even 10 years back? I'm not sure.
All right. So this is, of course, a never-ending debate and discussion. But another interesting inflation figure that is coming in from the US at this point in time, and US seems to have tapered inflation. It has come down, in fact, as low as 3% and cooled off in the month of June for the 12th straight month now. I think it's in line with the expectations.
It is definitely in line with expectations. And in fact, US inflation was hovering in the range of 9% 1 year ago. And from 9%, it has been hammered down to 1/3 of that to 3%. And pretty much in line with US Fed, pretty much in line with whatever was expected by way of all the FOMC rate hike cycles that we saw, which also eventually had a pause last month. But I think that pause in the US is definitely going to continue. I don't see any reason for US Fed to hike rates again.
There could be a cut when you are predicting a cut.
Hopefully there could be a cut, but maybe they will want to give this a little bit of breathing space and see if the 3% holds, or if it falls even further to, let's say, 2.7, 2.8% next month. Then there could be a case built for a cut. But right now, I think US Fed is going to continue sitting on the pause button, and no rate hike. This is going to augur well for the markets. This is going to augur well for overall economy in the US to start firing once again. And that in turn should result in the discretionary spendings that we talked about earlier in this discussion today, of discretionary spending by way of technology, etc., to kickstart again, and therefore business coming back to Indian IT sector, and this reversed guidance of single digit going back to double digit hopefully next year.
Remember, the Fed has a 2% target of inflation, so it's still slightly above that target. We will of course keep tracking that, but I think all in all it's good news for for not just the US but also maybe augurs well for India. Inflation coming down in the US, inflation a slightly above mark for India at 4.8%. We will of course keep tracking inflation figures, but shifting focus to Tesla at this point in time, two big things. Firstly, let's talk about Tesla's Indian dreams. plans or dreams rather to set shop in India. We're reading this morning that there could be a Tesla car for as low as 20 lakh rupee. I'm not sure how true
as
that
low
is.
doesn't sound very low.
No,
Shweta.
but
20
we
lakh
talk
doesn't
about
sound very low.
Tesla, it's,
Yeah,
and it's the brand that brings value on the table. I understand 20 lakh is not low for a lot of people, but for Tesla, it is still relatively low.
Totally. Shweta, now remember what happened. Elon Musk's team was here and met a lot of members in the month of May, if I'm not mistaken, or early June, late May sometime. Met members in the Prime Minister's office and met, heavy industries, ministries, spokespersons, etc. And I think the lobbying that was at play then was Tesla wanting to reduce the entry barrier into India by way of custom duties, and the government said nothing doing, brother, that's not going to happen, and we need to maintain a level playing field, and we're not going to lower custom duties for Tesla to come to India, number one. And number two, the government said very clearly, we don't want to be in a situation that you make in China and sell in India. So you want to sell in India, please come and make in India, and we're going to roll out the red carpet for you. And that seems to now be taking shape by way of Tesla coming and suggesting that it is open to investing in India, to set up a manufacturing plant in India, and this manufacturing plant to cater not just to Indians wanting to own Tesla, but also act as an export hub where Tesla could make as many as 5 lakh, 500,000 cars per annum, both for the Indian market and for the export market. And yeah, it seems to be that 20 lakh rupee is going to be the starting price for a Tesla electric vehicle, not just any other Tesla. Well, Tesla is electric by definition, but EVs per se are expensive, and selling EVs, even let's say a Tata Nexon EV, which is somewhere between a hatchback and an SUV. Basis yesterday's new definition of SUV, I don't know where it fits, but I think it would not be classified as an SUV. It's not 4 meters, right? So a Tesla, a Nexon EV starts at about 13 lakh, 14 lakh rupees, goes higher than 20 lakh rupees. So if you can get your hands on a Tesla at 20 lakh rupees, I think it is great news. But
Nothing
of course,
like it.
a lot of possibility of a slip between the cup and the lip. So I don't know how long before this proposal comes in, MOUs get signed, land gets acquired, and manufacturing begins.
Local partner
and then there is going to be
onboarded.
localization, local partners, fame, no fame.
And that 20 lakh may become 30 lakh in next 5 years.
Absolutely.
You never know. But of course, something to cheer this morning.
Before this news, I'm just looking at all, whether it's Carwale or Car Dekho, the cheapest Tesla car in India ex-showroom was 45 lakhs. So 20 is little less than that.
Yeah, of course, but that
half.
includes the custom duties.
Everything, yeah. So before this
correct.
news. So
And not just that, come to think of it, Elon Musk is now saying he's going to come up with a new AI company, Amit. So artificial intelligence is something that Musk is now eyeing after Twitter.
And that too in India. So so he is basically going everywhere, and Elon Musk is what Elon Musk does, to put it simply. So
XAI.
XAI.
Right? So if you remember, Shweta, when ChatGPT was launched, I'm talking about December last year, Jan this year, and it had that record run of 10 million downloads and then quickly scaling up to 100 million downloads, etc. There was this sort of cacophony of ChatGPT cooking up fake information, using its own artificial imagination to come up with artificial facts, and not really being corroborated seriously by authenticated reports. And that is when Elon Musk had then announced that, Truth GPT is what the world needs, and that is what I need to come up with. And he went on Twitter, his other platform in relation to Tesla, where he pretty much stated that Truth GPT is what the world needs and not Chat GPT, and in some seriousness joked about his intentions of getting into the AI space. But apparently it was an earnest effort, it wasn't a joke really, and that comes by way of XAI, which is going to be launched and hopefully is going to be a competitor to ChatGPT. But the formal announcement and more information on XAI is likely to be launched on Twitter on 14th of July, which is tomorrow. So we'll have to...
I'm told it unveiled a website and a team of dozens of staffers. The company will be led by Musk, obviously, to begin with, and will work closely with Twitter, as you rightly pointed out. It's interesting because it comes in the wake of Musk criticizing ChatGPT, calling it woke for settings and safeguards. He wants it to be something like Twitter, where you do not filter out anything, because that was one of his contentions with Twitter as well, that you're trying to filter out what you presume to be hatred. There's no strict definition, is what he said. I don't believe in that personally, but he said you do not have to safeguard anything, you do not have to filter anything. And in this case, he says that ChatGPT should have turned off its woke settings, which is respond truthfully rather than work around the biases and sexism, etc. So he wasn't quite in favor of that. It will be an interesting launch. It will be interesting to keep a track of how his AI performs.
AI is a very, very new territory for everybody in the world, and the kind of success that we saw with ChatGPT also waned away in the month of June. In fact, it had its lowest number of fresh downloads in the month of June, and data suggested that usage on ChatGPT had come down. And parallelly, you talk about, let's say, Google Bard, which took off and had what we called a bust life cycle. There's a immediate spike and one wrong message, one wrong case, and it went down. And we haven't heard of Google Bard since. Talk about, let's say, Baidu coming up with its own ChatGPT version, generative AI version. China, information hard to come out of the borders of China, so we don't know what's really happening there. Wipro will take at least another 3 years before AI 360 comes to the fore. And here we're talking about ex-AI Elon Musk. Yeah, he's got staffers from DeepMind, OpenAI, Google Research, and what have you. And all these are going to work together to create something as potent, hopefully, as ChatGPT, with some differentiation. But how long before that comes out? How long before it gets authenticated, and how long before it really gets implemented is yet to be seen.
We'll have to wait and watch out for that. But shifting focus back to India now, and back to particularly the two-wheeler EVs or electric vehicles in general. It's not just Tesla, it's the two-wheelers as well as four-wheeler electric vehicles that have a long road to traverse. And as far as Indian government subsidizing the electric mobility is concerned, there seems to be some sort of a new plan in place by the way of FAME 3. We've seen FAME 2, outlay of 10,000 crore rupees. Amit, there's going to be a FAME 3 now. It's going to be different from what FAME scheme has been so far. What's in store? Yeah,
so there are two sides to that. So the wheels towards FAME 3 are definitely moving. It's expected to be more towards the infrastructure, as we all know, and not just on the consumer side of it, subsidizing the vehicle. But the other side is the legal actions are still playing out. So the Ministry of Heavy Industry has warned that they'll take legal actions against the 17 OEMs who have basically flouted the eligibility limit of 1.5 lakhs by separating EV chargers from the cost of the vehicles.
Okay. So let's break it down. What really happened? So what happened essentially, Karthik, and we've tracked this story very, very closely, is that many OEMs, in order to avail the upfront subsidy or discounts to its users, did not adhere to some of the basic guidelines of FAME 2. They continued getting subsidies for 2 years, subsequent to which the government woke one day. We are given to understand that there was a letter, an email that was sent out to the Department of Heavy Industries, alleging that some of these players, namely out of the 13 existing or 13 or 14 existing players, have flouted the localization norms, to be particular, which is 50% of your vehicle should be locally made, locally sourced. After which the government says, pay us back. To the tune of 400 crore rupees.
That's right. And unpaid subsidies of 1,200 crores still pending, taking it up to about 1,600 crores. Absolutely right. So I think what happened subsequently was the revision in FAME 2 came by way of reducing the subsidy from 45% to 15%, amounting to a reduction in subsidy for the consumer from 50,000 rupees per vehicle to about 21,000 rupees per vehicle, which is still subsidized. So FAME has not really been taken away. The amount of subsidies given to the end user through the distributor, through the manufacturer, have been reduced from 50,000 to 21,000 rupees.
Only for
the
eligible.
Government's logic, only for eligible, those who have not flouted the localization norms. Now, the government's logic there was that let's give subsidy to more number of people within the budget of 10,000 crore rupees allocated earlier, and that would give an extension to the longevity of the FAME scheme as opposed to giving more subsidy to fewer people. So subsidize more number of consumers, more number of vehicles, rather than heavily subsidize few consumers and few vehicles. Now what FAME 3 is going to do apparently is FAME 3 wants to expand this ambit of the FAME subsidy even to light commercial vehicles. And that will now likely be included in FAME 3. It is not going to be restricted to electric two-wheelers alone, but will be expanded to commercial light vehicles as well.
Right.
And in addition to that, I think some incentives by way of FAME, not PLI, and PLI is going to run parallelly. So I think the debate right now is between how much of the subsidy should come by way of PLI, which is for industry, and how much should come by way of FAME, which is for end user. And I think that is going to get clarified in FAME 3, where FAME 3 also wants to now add part of the subsidy to localization, vendors that make these parts that eventually go into the automobiles. So whether it is battery makers, whether it is makers of any other components, electric components and what have you, it looks like FAME 3 is going to include those suppliers to fulfill the localization criteria for the manufacturers who may avail of the PLI.
All right, so suppliers are likely to get some sort of benefit as a part of FAME 3. We will of course keep tracking all those details. We've run short of time at this point in time. Thanks very much for joining us.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.
Akshay Kumar makes his Marathi film debut in Mahesh Manjrekar's Vedat Marathi Veer Daudale Sa. What's inspired Khiladi Kumar to foray into new terrain? Playing iconic Maratha king Shivaji Maharaj, he's jumping on a bandwagon that spells magic on the box office. Why are filmmakers in a rush to chronicle the life and times of Shivaji Maharaj?
Why do we feel the hunger, the need? Why are we compelled to make a film on Chhatrapati Shivaji Maharaj? And that too so many films. For a simple reason, he was the people's king.
So I think there's this herd mentality in the film industry. One film clicks, then there's a line of producers who announce films with similar storylines.
Personality that has not been adequately explored on the big screen.
I think among filmmakers the craze is because the Marathi audience is somehow inclined to seeing films about the life and times of Shivaji Maharaj, and several films in the recent past based on his life or based on some chapter of his life have done well,
Now we see in the last 10 to 15 years that historical subjects have made a remarkable comeback. So here is a personality and a remarkable personality that hasn't been explored in the new era. I think that's the reason a lot of filmmakers are tapping into Chhatrapati Shivaji's life in order to depict it on the big screen. and on OTT platforms and other such platforms. One other factor that is also responsible for this series of movies on Chhatrapati Shivaji Maharaj is that ever since Prime Minister Narendra Modi's dispensation has come in 2014, there have been previously neglected historical figures around